Right, ladies and gents, we're back for part two. I'm just going to jump straight in with the question. Right, Darren, would I be right in assuming that when you buy gold, it's for wealth preservation and not you're buying it for like a growth stock where you're just hoping to see it increase in price? You're actually just hoping, you're just buying it with the aim of preserving your wealth.
Yeah, definitely. That's got to be the first thing that you got to think of when it comes to gold. I think you got to think of it as being real money, first of all. And you've got to think of it as being a savings mechanism as well, rather than just thinking, yeah, I'm going to put some money into this and it's going to flip and double within a week, 2 weeks, a month or whatever. Like with cryptocurrency, that can do those sort of things. It can make them big, massive jumps up and down, and some stocks and shares can make those big, massive jumps up and down. Yeah. But with gold, it's a little bit more stable, if you know what I'm saying. So that's why it's not attractive to some people, and that's why they like to compare it to other things. Like a lot of crypto guys will compare gold to crypto. Right. They're two complete different things. So I think you can get some growth from gold and silver, but I don't think that should be the main aim, if you know what I'm saying. So when if you ever get into gold, investing into gold and silver, don't get into it thinking I'm going to get rich from it. Think of it as I'm gonna basically put some money into this and I'm going to secure it. So I've got a few little bits and pieces of information here to help me explain this a little bit better. Okay. So one of the things I think is that the subject of savings gets overlooked, and the gold should be your pot of savings, basically. Yeah, that's how you should see it, first of all, as your pot of savings. And as I said before, a lot of people don't think it's important to have savings anymore. We're all trying to, as I said in the last one, we're all trying to get rich quick. Yeah, everyone wants that quick fix. Yeah, I call it the McDonald's society, where, and you said the microwave one, didn't you? Yeah,
the microwave generation.
The microwave generation, isn't it? So everyone wants that thing. They want the instant satisfaction. Yeah. Or what do you call it?
Gratification.
Gratification. That's the word. I knew you'll be able to come up on that one. So basically, I'm trying to put a message across that savings is still a relevant and important thing to have today. So I'm in crypto. I invest a bit of my money in crypto. I did have a little bit in stocks and shares, which is a good vehicle as well. I run my own business, which I mentioned before, which is another investment, which is another good vehicle. But as I'm going to explain here, the importance, I think, of having things in portions. Right. So I basically split into 3 portions. Now, portion 1 for myself is to cover basic living expenses. So I think that's one of the most important things. When you're coming up as a young person, first getting into work and stuff like that, and just first building yourself up, you're not really thinking of investments. You're not really thinking even of savings at that point. You're thinking of covering your basic living expenses. So that's got to be the most important thing. So if I've got someone working for me, if I'm bringing up an apprentice in my business, I want him to focus on that first. I haven't got one at the moment, but when I do start bringing people through, I want them to focus on that. Make sure that you can afford to pay for your food from Monday to Friday. Right. So when you work Monday to Friday, and it's like if you're getting paid weekly or monthly, at the end of that week, when you come back for the next week or the next month, you're not skint. You've got enough money to get you through again. You know what I'm saying? Because a lot of people, they can't even get that part right. So if you can't, and I was like that myself as well, if you can't even cover your basic living expenses, then it's kind of not a good idea to be trying to jump into investments and into other things first. It's good to start from there. So definitely. So I've got written down here, I would like to have a minimum of 1 month to about 3 months of basic living expenses covered. So that's 1 to 3. 1 is a minimum, 3 is a maximum. 3 is still quite a lot. So you could break that down to 2, but I'd say 1 is a minimum. Reason being, and I said the reason for this is because you don't want to have to dip into your investments. So if you got to that next stage of being able to cover your basic living expenses, and you're starting to get into investments now, you don't want to have to dip. What I say, you don't want to have to dip into your investments or savings to cover your monthly living expenses.
Yeah,
I hope that
definitely
makes
not.
sense. So
Definitely not.
the first lesson, cover your basic living expenses. And I've got another little bit of advice here. So the worst case scenario is like, say for instance, if you got your money into some crypto, and you got your money into some stocks and shares, all of it, you haven't got no savings, nothing, everything's piled into there, you haven't got no fiat currency for your basic living expenses, and then your cryptocurrency takes a 50% dip, like it can happen, it happened in March, or you're invested in some stocks and shares that have gone wrong, and that's taken a 50% dip or whatever. So all your money is gone. It's you can't touch it, sort of thing. And then you might have a bad month, or an unexpected bill might come up that month for your basic living expenses, and you need that money. You need £1,000 or something, or even £500 or whatever. Where are you going to get it from? At desperate times, if your only avenue, if you can't borrow off anyone, is your stocks and shares or your cryptocurrency, you're going to have to go to that. Exactly. And can you imagine you've got circa £1,000 invested in crypto, is only worth £500 now, and you've got to go and take £500 out of it. Can you imagine that?
That's going to burn, bro.
You're back to square one again.
Exactly.
So who's running around telling your mates about how you're like you're doing well, you're getting in the investing world and that, and then it's like snakes and ladders, isn't it? Yeah, exactly. I'm doing all right. Then bang, straight back down again. Yeah. So that's basically portion one. Portions cover my basic living expenses. Now, once you can get that right, then there's portion two, and that's for growth investments. So going back to the question that you had, is gold, not golf, is gold for wealth preservation rather than being a growth stock? Now, if you want to get into growth stocks, then as I said, I don't think you should look at gold as a growth stock. So other growth stocks that you could have would be stocks and shares. It would be cryptocurrency. It will be investing in your own business, like I do. I've got my own business. I've been running it for quite a while now. Or investing in a house, or anything like that. Anything that creates growth. Gold is not a growth investment. It shouldn't be seen as that. It should be seen as savings. So that's portion two, growth investments. So portion three, which is just as important as all the rest of them, is savings. And this is where gold comes back into it again. Right. So I'm keeping everything relevant. So with this portion for savings, you could do it a couple of ways. You could keep that money in the bank, like a lot of people do. So they're afraid to put into gold and silver. The amount of people that I said to them, why don't you like buy a bit of gold or whatever, or they're not interested. It's just easier to have it in the bank. They don't have to worry about it. And I can understand that, because it's just like running your own business. It's not for everyone. Not everyone would take what they see as a risk of running your own business, if you know what I'm saying. It's not for everyone. Some people prefer to have something that they can see, like, and they know it's not going anywhere, being in a bank. But over longer periods of time, putting your money into a bank is known to lose its value.
Definitely.
And nowadays, this is the worst thing about it. As I said before in the first part, back in the day, you could get like, from what I've been told from my dad and that, you could get like 13, 14% on your savings. Yeah. You could get big interest on your savings. Nowadays, those days are gone. And I've done a little bit of research on this. I know you've done some research yourself as well. So nowadays, you don't get as much interest on it. So the other way of saving is you can convert that fiat currency into silver or gold. That's another way of saving your money. So you've got that fiat currency, you can convert that into gold or silver, which is known to be a good value, a good store of value for longer periods of time.
Plus it hedges against inflation, doesn't it? So
yeah, they say, I watched a video before, and he done a long-term example of it, and he had a pile of gold, and he had a pile of cash, £5,000 cash, and he was saying that back 40 years ago, that basically you could buy a house for £5,000, a 3-bedroom house. This was in Australia. and this same pot of gold that he had on his table, that would buy the house as well.
Yeah.
And then you fast forward 40 years, that 5 grand is not buying nothing.
Yeah.
That same pot of gold, what he said, kept up with being a hard asset with another hard asset. It kept up. And you could, and so that was one of the things. So so basically, as I was saying, you could play it the safe way, what people think is a safe way, and keep your money in the bank. There's nothing wrong with that. If that's how you prefer to do it, then that's a good one.
That's how most people are programmed to think.
Yeah, that's it. That's it. But yeah, I don't know whether it's the best way. It's definitely not the best way for me, I don't think. I don't know, I think I mentioned here, but I would like to keep, I did mention it, I'd like to keep a bit of fiat currency there. So I would keep some of my money in the bank. I would like to keep, as I said, 1 to 2, maybe 3 months of that fiat currency in the bank. But it's not for savings, it's more as
emergency use.
Yeah, sorry?
Like emergency use.
Emergency use, yeah. So I'm not against keeping fiat currency in the bank, and that's why I say there's a place for everything. That's one of the things I was trying to say before. There's a place for everything. There's a place for crypto. There's a place for stocks and shares. There's a place for fiat currency. There's a place for gold and silver as well. So I'm not all gold and silver and like, oh yeah, everything. Or I'm not all the other one. I think life is about balance. Definitely. So I'm going to get back quickly to this subject of saving. Now, I've done a little bit of research on here on the different avenues for saving. So I've got one avenue, which is putting it into a high interest savings account. That's one avenue. Another avenue that you could use is putting it into a fixed rate ISA, which has got a minimum term of 5 years. The high interest savings account is fixed rate as well. And then the next one is putting that money into silver, which is not as good as gold, but it's still okay. And then the last one is putting it into gold. So I'm going to give you an example of like what would happen if you've done it, if you put it into one of those different places. Yeah. So using £1,000, and this is based over, I'm putting this on a time scale of from 2013 to now, 2021. And the reason why I've done that is because my own research, and that's when I started getting into gold and silver. That's when I first started looking at it and again trying to save my money, because all I was doing is I was getting money and it was going through my hands. I was never really that good at saving fiat currency. So I thought to myself, if I buy a bit of gold or silver, that's going to be harder for me to sell and harder for me to spend. Yeah. So therefore, I'm able to stack that a lot better than what I'd be able to do if it was just like fiat currency, basically cash. So so the first one. So I'm just not rabbiting on too much. So the first one is good, so the first one is if you put £1,000 in to a high interest savings account over 8 years from 2013 to 2021, basically you get 1% interest on your £1,000 per year. Right. So that's £10. Yeah. So I'm going to slow this down because I want people to get this one. So you'll get £10 per year on your £1,000 over 8 years. Right, so that is nothing. Yeah. So your growth profit would be £80. But you'd have the peace of mind. You'd be like, yeah, I've got my money in there, it's in there. So you're happy with it. You don't have to do any missions. If you want your money, you can go and get it. But I think them high interest savings accounts, I think you have to wait like about 30 days or 2 months before you can take anything out. Otherwise you get like penalty clauses. So that's the first one. £80 growth profit if you put into a high interest savings account. Second one now is the 5-year fixed rate cash ISA account. Now that's a little bit better than the first one. Oh yeah, and I forgot to mention that high interest savings account that you put your £1,000 into is also subject to tax on the interest. Right. Oh, I didn't know that. Yeah. So if from your £80 you can lose £16 of that £80 as well and end up with £64. Yeah. Yeah. Because they tax you on your interest as income, isn't it?
Oh wow. No, bruv, I did not know that.
Yeah, well, now you know.
I thought, is it to do with your
Is it
tax status?
Is it earning? Do you know, like, you know more of this, not like with the stocks and shares, you've got the ISA stocks and shares account.
Yeah.
And then you've got the other one. I've done the ISA stocks and shares account. I haven't done the other one. And the other one is taxable, isn't it?
Yeah, that's right.
Yeah, the ISA one is non-taxable, isn't it?
Yeah, up to 20 grand.
Yeah. So think of it the same way. The other one in the stocks and shares, imagine that as your normal bank, taxable. The ISA is not taxable. Same thing. So any money that you earn interest, you're going to get taxed on it.
Yeah.
I'm not too sure how it works. I think the bank might even take it off you before they give it to you.
Yeah, that makes sense.
Yeah.
They're not giving it to you and trusting you to give it back. Yeah, they're taking it before they even give it to you.
I think the government has set it up. So, yeah, so they take it off you already. I'm still drinking Corona. That's why I've got a little bit of gas.
Yeah, I'm on Captain Morgan tonight.
Yeah. That's it. Right, so savings, yeah, we're still on the subject of savings. So that was the first thing. You put your £1,000 into that, you end up with £64 in a higher interest account. Secondly,
there might be a little bit more that you get though, because it will be compound interest. As in, you get paid your interest 1 month. So then the next month, they're going to calculate the interest that you earned last month and add on top. So it won't be much, but it will just be a little bit more. So
yeah, you're getting into some levels that I don't really know the answers to that one. So I'm trusting you that you got the info on that one.
Yeah, it's like the numbers are correct. It's just it may just be that little bit more if you left it in there and the interest compounds. But yeah, it's still not going to be much at all.
But you can. It's not just a straight 1% per month. Then as £10, it could turn a little bit more. So yeah, so the best case scenario is that you're gonna obviously by the time they're taking off your tax, best case scenario is that you're gonna come out with £80, if that. Maybe a little bit less.
Definitely.
So then the second one is the fixed rate, 5-year fixed rate ISA account. And from what I've been looking at on, was it Money Compare the Market, whatever it was called, Money Supermarket.
All right.
.com. That's where I was getting all this information from. So yes, on that it's 1.35% interest on your £1,000. So ISAs are good as well. If you haven't got no other, if you haven't got no vision to put your money anywhere else, and that's the only thing that you can think of, then that's still a safe bet, isn't it? You're still keeping your money. And basically, if you've done that over 8 years, again, per month, the interest will be roughly about £13.50. Over 8 years, that would be £1,108. So that gives you your growth profit of £108. And there's no tax on that either. Because
over 8 years?
Over 8 years. Your natural reaction on that was good. As like, hold on a second. It's like, can you hear this? Fucking 8 years, £108. Wait, that's a fact, mate. That's from moneysupermarket.com, whatever it's called, and it shows you fixed rate, and that's per year. That's what you can earn per year, 1.35%, nothing more than that. I'm sure there might be some geek out there who can tell us some other different way that the general public doesn't know about, that's not on your internet, that you can get a bit more out of the savings account. But this is just a general knowledge, you know what I'm saying? So yeah, so the first one, £80. Your money's safe, but you've only made £80 over 8 years, but your money's safe. So you're saving your money, so you're still doing well. If you're saving anything, you're doing well anyway. So that's that. So the ISA, again, you're doing well because you're saving your money, but you've only got £108 growth profit on the money that you put in. So now we're sticking with turning fiat currency into what I call real money. And that's one of the things that I like to highlight. Gold and silver is real money. Traditionally, can't even say the word properly, traditionally, for years, it's been known as real money. So if you put that £1,000 into 2 kilos of silver in 2013 till now, you would, first of all, it cost you £1,000 for the 2 kilos. If you used to sell it now, it would be about 1,500. So you put in your £1,000, like all the rest of them 8 years ago. Now you could sell it for 1,500. One of the easiest places to sell it is on eBay.
All right. Okay.
Yeah, it's one of the easiest places to sell it, because a lot of people have got their they've got their feedback on there and that.
Oh yeah.
See who you're selling to. It's anything's a risk, but that's probably one of the safest places to sell your stuff. If you're gonna sell it. There are other places, but I'm using eBay as an example because it's an easy place to sell your precious metals and anything else you want to sell, really. But with eBay, if you sell your silver or gold on there or anything else, especially silver and gold, you will pay eBay fees and you'll pay PayPal fees as well. So I've calculated that into the cost as well. It's roughly about 13%. So you put in your £1,000 in 2013, 2021 you want to sell now. You're gonna it's worth 1,500 minus the 13% eBay fees, PayPal fees. It's £195 in fees. So you're going to pay that. Then after that, you'll end up with £305 in gross profit on your £1,000. So the first one was £80.
Yeah.
The second one was £108. £108. This one's doing better. This one's £305. But again, if you buy silver kilo bars, it's subject to tax as well.
Okay.
If you buy silver coins, that's classed as legal tender. Yeah. That's capital gains tax free.
Okay.
So this is what a kilo of silver looks like. So this is just so you can see what a kilo of silver looks. It's quite big. It's quite heavy. But it's still a very good store of value. And this has got loads of uses, just like copper. This is not worth as much as this.
Yeah. But
both these metals have got loads of uses. So they're not just money. They're not just stores of value, but they've got loads of uses. So if you go on the internet and you type in what uses has silver got or what uses of copper got, you can find out they've got a lot of uses. Yeah. So yeah, so minus the tax on that one, you'd end up with around about £244.
Right.
So you're still doing better than the ISA account. And some people might think, well, you got the hassle of selling it and that to make £244. I'd rather just have the £108 profit. And I can understand that, if you know what I'm saying, because the hassle of selling it. So they may not think that's worth it, if you know what I'm saying. Imagine you get £244 profit or £108 profit, but you have to go through the hassle of selling it. What would you go for?
I'm trying to keep everyone's hands out of my pocket. So yeah, I would go with the silver. But where could someone go to sell it if they don't want to pay the eBay fees and whatnot?
You could sell it. You could sell it at a coin shop, or you could sell it at a cash converter or something like that. But you may take a little bit more of a loss. So out of your £305 profit, you might end up with the same amount of money as if you put it into an ISA account. Oh wow! Cash converters, they hit you like that, yeah. Yeah, they want to make their money, don't they? They're shafting. Yeah. They want to make the money. So the best place is the best place to sell your silver or gold really is to someone else who is on the same sort of mindset as you. Yeah. Who wants to turn their fiat currency into silver or gold. So that's why silver sometimes can be not as attractive because of that reason I just pointed out there. But one thing that silver is good for, if you're the type of person like I was when I was younger, and you find it hard to save fiat currency, then saving little bits of silver is a good way of building up your savings pot. It's a good way of teaching your brain how to save money, because you have to do a little bit of a mission to convert that back into fiat currency again to sell it. Yeah. So can you see the benefit of actually putting it into silver? That's one of the good benefits. It's basically a teaching tool, which is kind of like kind of like one of those bank accounts where you can't draw out your money.
Yeah, it stops impulse buys.
It stops impulse buys. You have to think about it, and not even just have to think about it. If you go and try and take it to a coin shop, you're going to take a loss. So you probably won't want to do that. So you have to like kind of plan the sale, if you know what I'm saying.
Yeah,
and at the right time as well. It's just So for me, that's how I started off. I started off in a little bit of gold, and I started off in some silver.
Right.
Mainly because it was easier for me to save up money. Now, when we get into gold, is a bit more attractive. And there's a couple of different things why gold is attractive. One is because you can store a lot of wealth in a very small space. So silver, an ounce, 1 ounce of silver is probably about the same size as a 2p piece, but a bit thicker.
Okay.
I haven't got one of those. When you start stacking up a lot of silver, it does take up quite a bit of room. So that's one of the other little downside sides about it. But when it comes to gold, I'll show you a little thing here. Here's a 1 pence piece.
Okay.
And everyone knows how small a 1 pence piece is, and that's a penny. Now this is the same size as a 1 pence piece. I've got this in a protective cover because obviously it's worth quite a bit of money.
Yeah.
This is worth between 340 to 380 pound.
Okay.
This, depending on what date you got on it, etc. and that, but they range between that sort of price. Over the whole year of 2021, it'll be between 340 and 380. And you can imagine that, like, that's a lot of money stored in such a small little space, isn't it?
Yeah, definitely.
Yeah. So back to the comparison again. So if you had £1,000 back in 2013, you could buy 5 of those. So yeah, you could buy 5 of those for £1,000 back in 2013. Fast forward to 2021, you could sell that for £1,900.
Okay. So
now you're seeing a bit more growth.
Yeah.
I still see it as savings because you've still secured your money. If you're trying to save up your money, you still secured the bag, if you know what I'm saying.
Yeah.
And as it's going back to the silver, it's the same type of vehicle where if you're converting your fiat currency into a metal, it's still harder for you to spend. So it's got that benefit as well. So yeah, so 5 of those sovereigns in 2013 cost you £1,000. Sell them in 2021 for 1,900. That's the figures on that. Minus again your eBay fees and PayPal fees, it roughly equates to about 13%. So that's £247 in fees that you're going to pay off your 1,900. So that gives you a gross profit of £653. Now this is where it's become to me a bit more attractive. People's ears will prick up a little bit because they think, yeah, now if I'm comparing this to the ISA I'm getting like £108, and then with the gold I'm getting £653. It's no brainer, isn't it?
Exactly.
You're kind of like 5 times, 6 times your money, isn't it? On your growth profit. So it's kind of a no-brainer where I'll let you come in on this one. It's obvious where you put your money now, isn't it?
Definitely, because with the gold now, you're talking about you've hedged against inflation throughout the years and you've made profit. And what I don't want people to start saying or thinking is, oh, but if I put that in, say, Tesla or whoever, I would have made X amount of money. But that's not a saving. That's an investment. What we're talking about here is a true saving mechanism. And that's what I hope people take away from this.
Yeah, having the separate portions.
Exactly.
As I said, some people think that there's no point in having savings, or some people will say, oh, why can't I have my savings and investments in the same pot, in the same vehicle? And you can have one vehicle which is savings and investments. Like you could have cryptocurrency, for instance, which is a savings pot plus as an investment.
Yeah.
So you can do whatever you want. You could do that with stocks and shares as well. But me, I think I'm a bit old school. I like things that I can, hard assets. I like hard assets, if you know what I'm saying. Like, look, they invented that. I use this. One thing before I skip over here, by the way, that this is capital gains tax-free.
Oh, good to know.
So there's no tax to pay on this at all. If you buy gold coins, Gold bars are too expensive anyway, but best thing to invest in is gold coins, like Britannia's, anything from a quarter ounce sovereign up to about an ounce, and it's tax-free. So you can stack as much of this as you want, and you can liquidate as much as this as you want with those profits of £653 at a time on every £1,000, and it's tax-free. But as I was saying to you before, or as I was going to say just then, is I was going to use the thing of there's a place for everything. Like they invented the Hoover, but you still use the dustpan and brush.
Very true.
Do you know what I'm saying? So,
very true, brother.
that dustpan and brush is going to be around for years.
Of
you
course.
Be running around with your Hoover, saying, don't use a dustpan and brush. We've got the Hoover there, if you know what I'm saying. But then if you're in some places when your electricity goes out or something, or you can't get an extension lead to somewhere and you need that dustpan and brush, it comes in handy.
Exactly.
You know what I'm saying? So
just like candles, bro.
That's it. Exactly. There's always going to be a place for some of these things that have been invented years ago or have been around for years that some people think, oh yeah, that it's all about going forward, it's all about trying to get to the next thing. Like we're living in that type of society now where we're always trying to, trying to get too far ahead of ourselves. Like electric cars that drive themselves.
Yeah.
I don't know about anyone else, but I don't really want to be if I want to sit down, I'd rather have a bus driver driving me, or a train driver driving me, or something that's a little bit more controlled. I don't think I'd feel too comfortable sitting in the car and it's just like the steering wheel's going like that.
Yeah, they say most accidents are down to human error, but still, I prefer a human there because the computer cannot make moral decisions, bro.
Yeah.
Do you know what I mean?
It's the same as if people are paranoid about flying as well, and that's with a pilot. Would you jump in a plane with no pilot?
No way in hell, bro. No way in hell, bro. Because any computer in my eyes can be hacked. And if you got no one there stopping that,
so that's
stopping what happens. Yeah, no, fuck that.
We still need some old school methods, isn't it?
Oh, 100%.
So yeah, so a quick summary on that little bit there is 3 portions that I like to have. One of them is basically covering my basic living expenses, making sure that I've got a bit of fiat currency in the bank as a little cushion, that if any month I have an unexpected bill or something goes wrong, I can dip into that. I'm not fully there yet at the moment, in all honesty. I could do with a bit more fiat currency in my bank. And that's what I'm aiming for. So that's the first part. The second part is, if you can get to that, is making your money work for itself, isn't it? By putting it into stocks and shares, into some type of growth investment. So that's the other portion. The other portion, which a lot of people overlook, as I said before, is a portion for savings, which I think that is got its place. It's like the dustpan and brush. It's got its place. It's just as important as all the rest of them.
Yeah.
And that's it, really. So yeah, that's my little summary on that question. Is golf? I said it again, sorry. Don't cut this out either. Keep this one in. So I said golf. Yeah, I've been like doing a bit of research, and I've been like kind of prepping myself for this. And I've said golf instead of gold about like 5 or 6 times today. So I'm gonna get the question right. Is gold for wealth preservation rather than being a growth stock? And I said it is. Yeah, in simple terms, it is.
Wicked. Because my takeaway from this basically is then, if I pick any random investment, it don't matter what it is, whether it is Bitcoin or a house you're renting out, but say I've made £2,000 profit. No, let's say whatever the investment is, I put in £1,000 and I've doubled it. I've made 2. I personally would say, okay, let me take half my profits, and now I've got £1,500. Go again, but I'm going to take 500 of that and I'm going to buy gold and put that away, bro.
Yeah, that's sensible, because what might not be sensible is taking all your profit out and putting it all into savings. It's good that you actually mentioned that you would take half that profit and put it back into the investments again, and then put half of it into savings. So you know now that you're making a good move because you could double your money again.
Yeah.
And if you lost that money, you still got part of it saved anyway.
Exactly.
You see, you're not back to square one every time. The worst thing, I think the most defeating thing is when you're trying to do something, it fucks up, and then you're back to square one again. You keep on doing that a few times, and a lot of people will just give up completely.
Give up,
Then they just go from living from month to month, not even that, not even be able to get through the month, living from week to week. And and they don't bother, if you know what I'm saying.
Yeah.
So it's not easy managing your money, because that's basically what it is. My daughter's 14 now, and I'm getting her first debit card, and I'm going to teach her just basically that she already knows that you've got to work for money. I'm not going to just give her a card and she can just like spend it as she wants. I'm going to give her a card. I'm going to give her a monthly allowance, and I'm going to give her tasks to do to earn her money as well. So she knows that, like, the basics of money and the basics. I'm not really going to get into savings at the moment, but I'm going to teach her some of the basics, and then obviously get into savings and stuff like that. Like, right, if you, for instance, if you got your £10 a month a week allowance, if you don't need to spend a tenner and you only need to spend a fiver, that means you've got a fiver to save until the next one as well, isn't it?
Yeah, exactly.
And then if you do that a couple of times because you don't really need to spend it, at the end of the month you can buy something that you want.
Yeah.
So all these little things that I've got over there as well. I save pound coins. Do you ever save coins?
Oh yeah, I do. I save coins.
Menelik used to do that as well. I see him. He had a big, massive. Quite a few things. Quite a few people do that, don't they? Quite a few people put their coins and change in there. Like, I can remember, I was just putting pound coins in there, and after about 3 months, I saved up like £400.
Yeah.
So if you do that, well, that doesn't happen all the time, but imagine that if you've done that over a course of a year, that's a holiday.
Oh yeah, bro, that's exactly what I do. I've paid for holidays with my coin savings. Yeah, I've gone Thailand off of coin savings.
That's what I'm saying. Savings is important, isn't it? Even just
100%.
Put in every time. If you get into a habit, it's just like training your brain to get into the habit. Because, like, before what I do, if I got the change in there, you go and spend it. Keep on spending it. When you train your brain that you're actually putting a part of your income away every time, then you can do things with it. Just small, simple lessons like that can make a difference.
Because for years, I've never spent coins, bro. If I break a note, the coins get saved. If I need to buy something again, even if I got the change, I break another note, bro. But I don't spend coins.
What, all coins or just
all coins?
All coins, yeah.
All coins. I haven't spent a coin in years. I only I break notes, save the coins.
That's good. So and you managed to get holidays out of it.
Yeah,
that's
more
good.
than one time.
That's good. So yeah, people, this is why savings is important, and why gold is real money, and gold's position, I think, is savings.